right. Well, as we speak, the markets are a little bit lower, and Adani Enterprises Mangalam, the stock is down close to around 30%. Yeah. It's a nifty stock that's down close to around 30%. And I'm just trying to pull out some data. The last time I saw something like this on a nifty stock was in March 2020, when Yes Bank fell close to 50% intraday. Prior to that, in 2009, you had Satyam that had fallen 80 to around 90% odd. So for the time being, it's locked. Remember that band is getting revised every few minutes, so we'll have to keep an eye out on that front as well. But the other group companies as well are under some pressure. That's ACC and Ambuja Cements. In fact, talking about cements, let's welcome the next management. Orient Cement, well, they posted a rather good set of numbers. There was a bit of an improvement that we saw on the profitability front, on a sequential basis. Volumes were higher, which is encouraging, and realizations improved a tad bit on a sequential basis. But to understand what went on in the past quarter and what's the way ahead, we're joined by Mr. Deepak Khetrapal, the MD as well as CEO of the company. Hi, Mr. Khetrapal. Long time since we chatted. Always good hearing your thoughts. So let's get straight to that. Now, your numbers have shown an operational improvement, which is good news. But another aspect that stood out in the past quarter, and since we only speak from a quarter-to-quarter basis, there was this rumor that was floated that the Adani Group is looking at Orient Cement. So just for our shareholders and our viewers, since we got this query numerous times, I've read out the clarification you put out on the BSE, but any truth whatsoever that Orient Cement was on the block?
None at all.
Okay.
That's what we said categorically to the stock exchanges. We've been telling everyone. There was no truth. Even we were taken by as much surprise, I think, as you guys were when this rumor started spreading. No truth at all.
Okay, all right. Then let's get to business then. We have cleared the air on that front. So let's focus on your operational performance, which is going to be most, it's going to be paramount actually going ahead. Volumes. When we joined the last time around, when we spoke, I think in August, Todd, the initial target was you'll do close to around 6.1 million tons by the end of the year. As of the 9-month mark, you've done close to around 4.05 odd. What do you end this year with? A rough number? You want to revise that guidance? What kind of a growth are you guiding for the year?
I don't know, Nigel, whether we'll call it revising the guidance. We had said we'll do about 6 million tons. And having done what we've done so far and what we are, looking at the momentum, let's face it, till October, the markets were rather slow for us. And after that, seen the momentum. January has shown continued momentum. And now with the thrust coming in from the budget, which is, as all of us have seen, huge capex towards all these which consume cement. So we are actually expecting that this momentum will continue. And in this particular quarter, we are targeting to do somewhere around 1.7, 1.8 million ton in this quarter, which will take us to around 5.8 million away from 6 million as we forecast at the start of the year. So we'll be ballpark there. We're not far away from there. If you do 58 at 60 lakhs tons, I think we are okay.
So give or take a few points here and there, you will be close to that 6 million tons that you had guided for earlier itself. 1.7 to 1.8 million tons are the volumes that you're guiding for in this quarter. Just wanted to understand a little about the demand itself. You said that there is a fair amount of momentum, etc. We also understand that the demand is strong, but it hasn't reflected in prices. Can you give us a sense of where cement prices have been? And as a result of which, where does your operating income go to? EBITDA per ton guidance, if you could give us?
See, EBITDA per ton is always a function of two things. As far as prices, we are all seeing that the prices have not improved to accommodate the additional costs that have started hitting us, largely fuel costs, which we know are up by 35–40% of the previous year. Now, given the fact that costs are unrelenting and the prices have not gone up, EBITDA per ton is a function of how prices move from today to the end of the year, right? If prices stay around the level that we are, and with the kind of, let's say, about 1.7, 1.8 million tons of the volume that we end up doing, including what we call the operating leverage kicking in, I would expect that against about 630, 640 of last quarter, we should easily be able to cross over 700. The rest is if the price improvement does take place. And we've seen over many years, typically in the last few weeks of the financial year, when the demand is there, something does happen in the market and prices do come up. So I'm not completely giving up the hope that prices will improve. But even if they don't improve, we are saying the volume that we have a line of sight to is definitely exceeding 1.7 million in this quarter. operating leverage, some bit of savings from costs will be there, because if we compare it to, let's say, the previous year and even the previous quarters, our costs have started coming down, right?
Okay.
Sequentially. So if that continues and operating leverage supports us to the extent, I would expect around 715 this quarter, assuming there is no price increase.
715 rupees per ton, right?
Around that, yes.
Around that part, okay. And if demand is strong, Mr. Khetrapal, getting into an election year, volumes should pick up, right? For next year, for FY24, at current reckoning, what kind of a growth you're looking at? You know, the street wants to see Orient Cement grow at a fast clip. You have the capacity of around 8 million tons odd, but can you get to, say, a 10% growth, 6.6 million tons odd at current reckoning? Obviously, things could change, but do you think that's possible?
I personally think for the next year, assuming that all that has been promised by the budget and the support, we should be looking for, at least for our company, a growth which is definitely 10% plus, not just 10%.
Okay.
Even in this year, let's face it, the industry has grown. I think the first 9 months, the DIPP data does say that industry has grown about 10%. So from that perspective, I would expect growth to actually become stronger than even 10%. And we should be looking at, in our company, somewhere between 12 to 15% will come out with the numbers when we do the budgets in the month of March. As of now, I certainly think we are in for good times in the coming financial.
So outgrowing what the industry will grow, if industry grows at around 10%, you're expecting to grow by 12 to 15%. Final question before we let you go. Give us an updated debt in your books, the total debt, that's, you know, the short term as well as the long term. The interest cost has come down substantially in the last 1 year or so. What is that? And by 2025, 2026, what kind of a capacity are you looking at for Orient Cement?
So debt as on date is just around 400 crores, out of which about 40 crores is actually not interest-free debt. So about 360, 365 crores interest bearing debt that we have now, including short term.
Okay.
Project debt is down to about 270 crores now. The capacity expansion plans, as we look at it, we are closing FY23 now. I think by FY25, we should have added at least 3 million tons of capacity.
3 million tons of capacity. So from 8, you will go to closer to 11.
8.5 to 11.5. That's
all right, and that will be all organic, right?
That will be all organic.
Absolutely. No inorganic talks going on?
None.
All right. Thanks a lot, Mr. Khetrapal, for joining in and giving us all those details, clearing the air on a lot of the rumors that were going around as well. At the same time, giving us rough guidance for volumes and EBITDA per ton in the fourth quarter. We take a short break, come back. On the other side, we'll be joined by another management, that of Dabur. Mohit Malhotra, who's the CEO, joins in to discuss the company's third quarter performance.